this is a huge warning. Okay, you're gonna want to watch this all the way through because it's really important. All right. And we need to talk about this right now, not later. So I'm kind of doing this off the cuff. It might be a little bit messy. Hold with me. I'll try to really untangle this and be really precise with my language, okay? And make it actionable. We're gonna watch this video from Darius Dale, and it's a narrative that's been kind of like circling the rumors. I hear it from a lot of Wall Street guys, and I can see it now becoming more of a mainstream thing. So we're still kind of early to this concept. But I also want to take this as a moment to comment on what happened today. The Fed didn't cut. Some people are upset. I had to spend some time today explaining to Discord members how the cut is a good thing for markets. If the Fed did cut today when the market wasn't pricing in a cut, the market would crash. And a lot of people, especially guys, I mean, I'm literally looking over here at a crypto video where it's sad faces because there were no rate cuts. Look at this right here. They were both sad faces because no rate cuts. If the Fed cut right here, it would have crashed the market without a doubt, right? The market's not expecting a cut. If the Fed suddenly cuts, the market panics. Okay, what data did you see that we don't see that's so bad? And then they de-risk by selling assets. It crashes the market. Also, typically, when we start cutting after we're out of that hiking phase, it usually signals more lows on the way as well. So, like, even if the market crashes and the Fed's late and they do an emergency cut or a few emergency cuts, typically lows are still not in. More lows are coming in those scenarios. So keep that in mind because I keep saying this, and it doesn't seem to be sticking with people, but it's so important because the historical evidence is all there that this is the trend that we consistently see and during these periods of time. Okay, now let's hop into what Darius Dale's talking about here because it's all important pieces to the puzzle of why people probably aren't at all expecting of what's going to happen in the second half of this year because it's kind of hidden.
If the U.S. economy remains resilient, what is causing the broad-based dovish recent inflation data? I'm going to present this without comment, and for the record, I'm wearing my purple tie today because I know presenting this in front of some of you is going to get you agitated. But again, I said this when we got the April inflation data. Like this makes no sense in the context of everything we've been talking about from a productivity and unit labor cost inflation standpoint. You have negative productivity growth, accelerating unit labor cost inflation. Why is inflation just breaking down durably below trend?
So some of you might have zoned out right there. What he's saying is that we are making less stuff, less services, less goods. And it's also costing more to make those things. And typically, when you have that trend, it leads to higher prices for consumers. Yet the data we've been seeing does not show that. And so lots of people, like Darius here at 42 Macro, probably definitely one of the top 3 people I respect in the entire financial industry, is also frustrated by this. And he's telling you it doesn't make sense. And this guy's brilliant. And he's not the only brilliant guy who's like, something's off here.
Across every metric. Why services sector? Why is all this? Why all of a sudden is inflation just behaving in very dovish manners? Look at the Wall. Don't ask me. Ask the Wall Street Journal. Economists are raising questions about the quality of U.S. inflation data. The Labor Department says staffing shortages, cough cough Doge, reduced its ability to conduct its massive monthly survey. Did it reduce its ability, or is it making it only pick up prices that are declining? Or
let's also be honest. Doge is probably just an excuse because. If you've paid attention to all the data reports, almost all the data reports don't make sense. I mean, there's whole services dedicated towards what are the real inflation numbers, what are the real jobs numbers, some of these processes that they use to collect this economic data are so old-fashioned and so unpractical. A lot of them are just truly incompetent. But we'll overlook that for now and get to the point.
Are they only noticing the prices that are not going up and making the inflation data dovish? I don't know. I really don't care, to be honest. I don't care. If you're on the political left or political right and this is making you upset, why are you letting stuff make you upset? Life's too short. Who cares if they're cooking the inflation books? Just deal with it. If they're doing it, just deal with it. Who cares? China's been cooking the books the whole time. You would be bald if you were an investor in China pulling out your hair because the Beijing's cooking the. He's
right. China's been cooking the books for years, and people still invest in that. Biden probably cooked the books, and Trump is probably cooking the books to get the Fed to cut. Now, what's important though is the market is not properly pricing in what's truly going on here, right? So Trump's maybe cooking the books and make the inflation seem like it's coming down to try and provoke the Fed to say, okay, we've beaten inflation, now we'll cut. But Jerome isn't cutting because he's like, where are the tariffs? Think about the position Jerome's in right here, where if Jerome cuts now and then they stop cooking the books on inflation and inflation spikes and the economy crashes, he's the Fed chair that crashed the economy Trump can use him as a scapegoat. So look what Trump did, and then put in a new Fed chair who will do whatever Trump says. But Jerome destroys like his entire legacy, you know? And if instead he does nothing, waits for the data to actually get bad or the economy to crash, and then he cuts and puts us back on track and then leaves on a good note from his position, he kind of gets to leave behind a legacy. That's really all this guy has at this point, is just his legacy. And to be honest, he's got some errors, but compared to previous Fed chairs, he's done a pretty good job. Okay, all right, let's just be honest. He's done a pretty good job. So he's in a tough position. But what this does is this paints this picture where we actually probably are in a state of stagflation right now. We are, or we could be really in a recession. Like, we got the bad GDP print, and I've been telling members, like, my expectation is at least a technical recession. So I expect in July on the second quarter GDP numbers that we'll likely see a true recession, a true technical recession. It might not actually drag itself into the economy. We might just hit a period of stagflation. And I mean, look at where gold's at. I mean, that gold doesn't run when inflation's high. Gold runs in periods of stagflation, you know. And there's a few different narratives kind of coalescing together, right? There's also the idea that there's a de-dollarization, something that the Fed could also be accelerating with their decision making here, and probably also was accelerated by the distrust that Trump has, rippled into the world by going to economic war with everyone all at once. So, and really weaponizing the dollar in that way. But this is a trend that we've seen historically. We don't have all the data here on TradingView, but you can go look it up on FRAD, the Fed data website, and you could see that, like, in these periods of stagflation that we've had historically, that's when you get these massive rallies out of gold. So gold, I mean, not only is telling you that that's really what's going on, but it's also telling you it's probably going to get worse. It's probably going to go higher, right? And so when you're looking at the market right here, and I see that we're really starting to break down on the daily. For months, back in April, this was my box of, like, we're probably going to approach these upper key levels and then we're going to roll over. And it looked like, we did a video 2 weeks ago, and I was like, looks like I'm wrong. Looks like we're going to go to all-time highs and then probably turn over or even break out to a new high. Now we got the war going on, and we got Trump getting really panicky. Cut. The data's now making sense. Equities are getting carried away. There are so many things that could send this spiraling back to the downside. I think now is the time to be aware that the second half of this year, or at least until October, November, could be brutal. Okay, I saw a post today, people asking why gold was down on the day and what that meant. It means nothing. Okay, what this does on the day-to-day means nothing compared to what it's been screaming at you for basically a year, right? I mean, this is like normal chop, but this, right when we come into 2024, this thing starts going absolutely parabolic. It's telling you something. It had a suspicion, and now it's a confirmation, and now it's probably going to go to like 350. It's probably going to go to like 350, maybe 360, maybe 400 on the worst case scenario. Before War 3 breaks out, maybe 500. Totally possible. But right now, we are careening towards a state of stagflation. Could already be in a recession. I would imagine right now there's a lot of people. I know a lot of you are exhausted by the idea that, like, people have been calling for recessions over and over and over, and nothing happens, right? Peter Schiff, the famous guy who's called the last 28 out of 2 recessions, right? But this one looks more real and more convincing than anything I think we've previously seen, and you're getting the, like, golden signals from the market that there's a serious issue. And so, the tariff talks are just on pause, but there's a war going on. The data is bad, giving bad readings. And the market is, we got quantum stocks that have 8 million in revenue that are trading at billions in market cap. We've definitely got some bubbles going on. We've definitely got some pretty substantial euphoria. And when we look at the SPY on, like, the monthly chart, we're definitely rolling over. Okay. So I'm not saying that we're going to crash tomorrow. In fact, I got bullish positions on. I've got some hedges. But I'm going to keep following the price action. But I'm telling you, when it comes to, like, maybe your long-term portfolio, I've been overly cautious. So I've already been like 50% cash. And yeah, I've been buying some stuff that I really like that I'm willing to hold for some potential downside. But I think this is where you really need to be taking the idea of building up some cash and looking for safety, which is going to be either like gold or cash. Keep that in mind. When we are thinking about what the future holds, we want to think in bets, and we want to make sure we have an idea of all probabilities that could come about. And that's why I really wanted to rush this video out, because I think that I would say, for me, my base case is that we have a period of stagflation, and multiple suppression. Okay, and what I mean by that is, all things in the market are basically valued off of multiple of their earnings, and so I think that multiple that the market's valuing everything at gets compressed. Okay, instead of like, I actually don't know what the S&P is probably at right now, probably like in the 20s. Maybe we come down to the teens, and then we find a new normalization for a period of time, and that probably would also fit into a lot of the narratives of like European markets are suddenly catching bids. Chinese markets are catching bids, and China has a lot of tech that's really interesting. A lot of money is some massive percentage of all money in the world is concentrated in U.S. markets. So when you're thinking about trends and normalization, or just healthy retracements on a chart, like if the global trend of the U.S. collecting all capital was something like this, right, that was going parabolic, if that was a stock chart, you'd probably say that don't look right. It probably needs to come down. This could be one of those where we just get a retracement and then we go back to the spike, right? It doesn't mean like the world's ending or that the U.S. is dead and we're gonna turn into Rome, or I'm not gonna go that far, right? I actually think that we're in a pretty good spot and we'll probably come out of this okay. Maybe. Always thinking bets. I just want to make sure that everyone's aware of this because I don't think it's on people's radar. All right, think about it. Give some critical thought. Let me know what you think in the Discord link down below, and we'll talk about it.